Welcome back. Still 26,250 being a bit of a hurdle for the index, and Sudeep Pharma now is still up 32%, but shares worth almost 2,000 crores have already been traded on the stock on its listing day. Continuing our conversation on the markets, George Thomas from Quantum AMC is now joining in. George, good morning. Thank you for joining in. The markets may have hit record high levels yesterday, the benchmark indices at least, but the broader markets is where the actual pain lies, right? You see the mid caps, the small caps, the micro caps, at least 2/3 of the stocks have given negative returns this year. Do you believe that the excesses in the broader markets have now been wiped out and now it's the time for the broader markets to outperform, or do you still see some more pain for the next couple of quarters?
Thanks for having me on the show. So we are slightly longer term investors, and generally we base our calls based on what could pan out in the next 2 years. But having said that, so what has happened in the markets in the last 3-4 years was certain pockets, especially in some of the small, mid cap and micro cap names, had rallied to an excessive level, and some of those excesses have corrected in the last few quarters. But our sense is, given the point where we are currently, the earnings growth has not been great for the last many quarters. And there has been a series of actions from the policymakers to boost consumption, and some of it is starting to play out on the ground. So if you look at this year, there has been direct tax cut, indirect tax cuts, and even interest rate cuts, which has happened simultaneously. And along with that, you are sitting at an earnings base which is not at all ask. So our sense is from here on, the earnings growth should turn for the better. And from a 2-year perspective, we are seeing a fairly good upside for a long-term investor. So we are quite positive on the markets. Our sense is on the large cap space, there are pockets where there is a chance for good upside. But as you come down the market cap in the small cap segment, investors has to be a little more selective, and funds which are cognizant of valuations are likely to outperform over the next couple of years.
In that case, since you're positive on the markets from a 2-year perspective, which are some of the sectors which could contribute to those growths, or you think it has to be very, very stock specific for any fund manager to choose?
See, last couple of years, if you see some of the sectors which has given muted returns are the major pockets of financials, IT, and some of the sectors like consumer staples. But from our portfolio perspective, consumer staples, we are not still reached a level where investors can expect decent returns if you marry valuations versus the earnings growth potential. But our sense is some of the segments like financials and IT should turn around from here on. Financials is a mix of banks and some of the savings related themes like insurance. Banks are seeing some signs of credit growth to kind of moderately picking up from the levels where they are. And as the economy picks up, it should become better from here on. Insurance companies have seen certain transient issues, and in the very recent past, markets were worried about the tax tweaks which happened there. But when we speak to companies, we are seeing most of it has been kind of passed on to the value chain in terms of distributors and stuff. And our sense is from here on, given the attractive pricing because of the tax changes, most likely the ticket sizes can improve, and investors should see better growth from here on. The other big pocket where we have a reasonably good upside is IT, where things have been muted for quite a long time. And our sense is from an impact perspective, it is more macro than AI. And as and when the global things settle down, enterprises should start spending, and some of these companies should clock decent revenue growth.
But George, there has been a lot of uncertainty with regards to the IT space. I was just reading your note that you have shared. The IT services players reducing their dependence on the H-1B. There have been comments from the US president as early as today with regards to immigration. But the commentary from a lot of the players on ground still suggests that nothing much has fundamentally shifted. There has been this talk over India being an anti-AI play and so on and so forth. But will only a valuation correction be enough for an investor to bet on IT, or the cons far outweigh the pros right now?
See, when you evaluate the IT service spends, how it typically happens is there is a permanent spend which is required for maintenance and which is minimum in nature. And then there are certain good to have projects which is typically called as discretionary projects. So in a bad macro environment, when enterprises are not sure about what could pan out in the next few months, they would keep these discretionary projects on a back burner. But what we have seen in the past many cycles is as and when, and there would be a point where even delaying those discretionary spends would have an impact on the enterprise. So they cannot be deferred forever. That is one angle. The second dimension is whenever there is a tech transition. For instance, there are a lot of use cases or POCs, proof of concepts, which are evolving for these new Gen AI related things. And IT service companies, by nature, they participate at a later stage. They are involved in terms of, so even if there would be a good amount of companies who have created good use cases for generative AI, but from an enterprise perspective, you cannot plug those Gen AI add-ons as is to their existing architecture. So there is substantial amount of work which is required in terms of modifying their existing software architectures, where IT service players come to help. And along with that, there would be a humongous amount of data preparation work. Your existing data could be existing in silos, your applications would be in silos. So this system integration and integrating with new technologies, that is an essential spend. And if you look at the global landscape where the labor force is distributed, India continues to have an edge, and the cost arbitrage between an engineer at the developed country and in India, that continues to be quite favorable. So we don't see any fundamental reason why tech spends on the Indian IT players should underperform in terms of revenue growth for a prolonged period of time.
Okay, all right, Josh, thank you so much for joining us with your market insights and sectoral outlook going forward. With that, let's move on in an exclusive chat with